Hello and welcome back to HLS Crypto. My name is Dan. Let me get myself out of the way. So, last chance at generational wealth. Don't miss out. Just before I get into the video as well, the Discord is now live. It's active. You can join it. The link will be in the description of the video. Feel free to check it out. Obviously, no hard sell here. If you don't want to join, don't join. If you want to join, join. The offer's there. I know a few people have been asking about it, so it's out, it's live, and it's ready to go, but I'm not going to keep banging on about that. Let's go on to the video itself. So generational wealth can mean very different things to different people. As, for instance, the elite big owners of all the big conglomerates and things like that, they already have enough wealth to last their entire family's offspring until the end of time. We're unfortunately not in that position. But what I'm talking about is making enough so that you can provide for your great-grandkids like they're provided for. You have the opportunity to do some strategic plays, and I think this is possible in this bull run. Obviously things like Casper, for instance, if you held Casper through to the next bull run, I think that'll probably be worth a big hefty price. However, my tactic is going to be, I'm not going to hold anything at the end of this bull run. Once this bull run is done, it'll all be in cash and then looking to do other investments. But should you hold on to 2030, if you've got that kind of time, then I think sort of Casper and Bitcoin are going to be, obviously big plays. Now, last chance might sound clickbait, but it's, in my opinion, this is the case, okay? So, as I've said before, the more regulated the crypto space becomes, the more the powers that be will begin to run it like the stock market. And that's why I think the 2025 bull run will be the biggest ever, in my opinion. I think this is the last big wave of crypto money in that regard. Because I think if we go forward to like the 2030, 2028, 2030, whenever that bull run will come in, I think the gains will be less. I think they'll be more regulated, and the more heavily regulated things are, often it can be more damaging than positive. Let's look at gains in the stock market now. Bearing in mind this is Apple, so I'm taking the most a prestigious elite stock. But Apple stock on December the 9th, 1983 was 10 cents. How you wish it was that now, right? So 10K invested in 1983 got you 100,000 shares in Apple. November the 22nd, 2023, that would be worth $19 million. Now, that's a lot of money, but it took 40 years. And bearing in mind, this is buying at the very bottom and having like a premier stock, like a really elite level stock. So other stocks wouldn't nowhere near perform that well, obviously. If you invested 10K in Bitcoin in February 2011, when Bitcoin was $1, I know it's been lower than $1, like 40 cents in different prices, but you get 10,000 Bitcoin essentially. Today, that would be worth $366 million. Now that's loads. Imagine doing that. It took 12 years, just 12 years. Now, if you sold at the all-time high of 69K in 2021, which would only have been 10 years to wait, $690 million for a 10K investment. Now, for me, that's multiple generational wealth. That's incredible. But now let's look what you tend to do. So you put 10K into a savings account with a 5% interest rate and you let it compound for 20 years, you'd have $26,000 back, a profit of $16,500. Now, that's based on 5% interest and doesn't factor in inflation or anything like that. So, that's not good, right? On a 1% interest rate, you'd return 12.2K, which is a profit of just 2.2K for 20 years. I think you'll agree that is shite. That is awful. No one wants to spend 20 years for a profit of $2,200. But you can see now how these different things work and how it's better not just to have money sat in a bank account doing absolutely nothing, because this is what can happen, right? So how can this be done? Now, as we know, Bitcoin is now in the law of diminishing returns. So from the previous all-time high to the new all-time high, the percentage gains are getting smaller. So what we need to do in this, how we need to do this, I think, is to do it in altcoins. And we need to be safe, but also add a few riskier plays that have huge potentials to skyrocket in the bull market. So safer plays, yeah, you can have like Bitcoin, Ethereum, Quant, Solana. Other people might want ADA in there, or XRP, XLM, whatever you consider to be your safe, blue chippy type cryptos. Mid-range risk, Trias, Casper, CSPR, HBAR, I mean, you can add others to this too, Polkadot maybe, a few other different ones. But for me, Trias is going to do, I think, a solid 50x. I'll be looking to layer out before that, but I think it's going to be really, really good. Casper, who knows at this stage? You know, it's likely that, you know, this could be 50 cents by the end of this year. So, I mean, who knows where that's going to end up going? It's like, could it go to 4? Could it go to 5? You know, I'll be looking at 10. I mean, I'm not going to say, I don't think 10 in this bull run, but the possibilities are literally endless with that one. Higher risk, but bigger potential reward. So Myria, Hello, PZP, VXV, TET, etc. There's others. You know, feel free to like mix it around however you want. But once positions are built and you're happy with your bags and you have that you've built, we need to look at one or two more plays that have a 500 to 1,000x potential. Now, it isn't going to be easy finding these because these are projects that are not even probably out yet. If we can find out, though, where the institutional money is going to be going, like if we can see before a project comes out and they're at the early stages, who's backing them, like which big conglomerates, which big money makers are backing them, then we might be able to get ourselves in really early and ride it up through the bull run. So this is something I'm going to have to be doing a lot of research on. I need to look into this over the next few months. And I think early next year, I want to put out a little, maybe 2 or 3 different plays that I've discovered. And I'll also show you how, what websites I used, how I found them, how I looked for them, what kind of metrics I use, things like that. Just so I want to be able to share that knowledge in case you want to go and look for your own ones or you want to try and give me some. That'd be handy too, yeah? Now, I'm not going to say these will be Wall Street memes or whatever other crap projects that YouTubers are being paid to talk about right now. You know, I think there's another liquidy one going out and now there's Wall Street memes. I'm not interested in any of that, nor do I want any sponsorships from any of those. Absolutely not. I'm talking genuine projects, right? So I want to do my best to research them. And like I said before, I hope that I'll find them, you know, early next year that we can kind of have a good discussion about them. They obviously won't be very popular or common at that point because they will just be very, very new. But I'll show you the exact strategies that I used, the websites, everything like that, to find them. So then we can have a good discussion about them. As always, you know, you make your own mind up there. Things I think we need to make sure of is, when we're looking at these projects, is a good solid team, good tokenomics, and a good project or product/vision. So if the product's not quite ready yet, but the vision's really good and you can see progress, then sometimes it pays to buy speculation sometimes. Obviously, that being said, that is slightly riskier because a lot of words on a sheet don't necessarily make a tangible product. So there are times where you've got to be a little bit wary about that. But I think that we're going to be talking 1 to 2% of the portfolio here. We're not going to be talking about big risk. So sometimes you can buy a little bit of speculation and be a little bit comfortable with that. Provided you've got the main bags built first, there's nothing worse than trying to put, you know, spread your money across multiple low-level targets, because then if only 1 or 2 hit, then it's not going to be as beneficial as if you get your safe ones first for your guaranteed gains. And then you move down the risk to reward ratio, and at the bottom you have your smaller percentage of your portfolio, but it has a bigger chance to hit bigger X's, which is kind of important. I think that's the best way to try and go around building generational wealth, because I think if you go all in too low on the low market caps, yeah, if one of them does go mental, then you probably will do it. But I still think that that's not really worth the risk. And I think that if we can play it a bit smarter, make sure we guarantee gains at the top end, you know, as best we can in the middle end, then we can have a little bit more of a play in the lower end. But again, having just 1 or 2 outside of that to the high risk end, which is what I'm trying to look at now, because I think what you will be finding a couple of these things with like zero market cap, you know, we'll be finding it at the bottom before they're released, and that would be nice to do. But obviously, again, it won't be anything to do with sponsorships. I don't want to see a countdown timer. None of that. This will not. You will not see a Shield sponsorship video for some shitty meme coin or any crypto related kind of product. That's just not where I want to be. But anyway, I'll let you know if I find anything, because I think it's worth looking up as a group. I think if we play these 3 steps right, along with that exit strategy, we can achieve that generational wealth. But we are getting low on time, so you know the bull run is approaching. Also, I just wanted to show you this as well. So I don't know if you've seen this chart. This is quite a nice chart. So as you can see, it's like a rainbow. So at the bottom, it's basically a fire sale. You've got the buy, the accumulate, the still cheap, and the hodl phases. And then you've got the orange where is this a bubble? Then you've got darker orange, FOMO intensifies. And then at the top, you've got the two reds, seriously sell now. And then you've got maximum bubble territory. So you can see here, this is where we are at the moment. And we're getting close, obviously, to that halving event now. But we're still in, accumulate. So a lot of people are still being a bit fearful. They see that things have pumped and things like that, and they have. And it's always nice to wait for a pullback before you start getting into projects. But in the grand scheme of things, we've still got a long way to go before we get to the point where FOMO intensifies. Now, I'm going to be looking to be getting out around FOMO intensifies and sell, because maybe slightly some of it on, is this a bubble? 20, maybe 25% increments, because this chart does give you an idea. And obviously you can use this with the fear and greed index. You can kind of get a better idea of the sentiment behind the market. But right now, it's an accumulate. So I'm happy with that. Continue to accumulate. It's good. Anyway, I hope you enjoyed this video. If you did, please smash the like button. I always appreciate when you guys do that. All the links for everything else, obviously, in the description. Subscriber-wise, we're over 1,800. We managed to do that last night, which is fantastic. So now we're going to be closing in on that 1,900 mark. And can we hit 2,000 subscribers by Christmas Day? Let's hope so. Thank you very much for everyone who subscribed so far. Wherever you are in the world, whatever you're doing, have an amazing day. Have an amazing evening. And as always, I'll see you tomorrow. Take it easy. Goodbye.